In addition to investing in the Indian equity markets, I've also been tracking the global markets, especially the US market. On the 19th of July close, I found a very interesting setup that was emerging from the S&P 500 index, and there was a clear double bottom in the 3700 to 3750 range that was forming, and possibly a breakout that could have happened above the 3940 levels. The chart on this particular slide clearly indicates a double bottom being formed at a higher level as compared to the previous low, and the breakout zones of the 3900, 3940 marked in the green rectangular portion of the right hand side of the chart. To further understand the setup and the probability of the move in the next few days, it would be wise to plot the price action against the moving averages. Typically, that I tend to use is a 1050, a 1020, and a 50 EMA and a 200 SMA. On this particular chart, we can see that 20 is actually started to bottom out and started to rise, but it is still below the 50 EMA, and the gap between the 10 and 20 has reduced significantly, which also indicates a possibility of a reversal. Now, the moves would be explained in the next chart. As we already know, a significant breakout would be sustainable only if there is a consolidation around the breakout levels before it moves further. Also, we need some time for the 20 EMA to catch up with the 50 EMA and the trend reversal confirmation. Basis that I anticipated two levels or a two-legged trade that was possible with this breakout. The zones have been marked as the first one being 4010 to 4020, which would be an initial target, after which a possible correction or a consolidation can happen, and the final targets would be in the zone of 4150 to 4170. A gap up opening on the 21st of July morning in the SPX actually hit our first intermittent target zone, which was between 4010 and 4020, and started to correct or consolidate for the gap to be closed before an up move begins. So this was where the first leg of the trade was closed, and we would wait for a retest or a confirmation of the rally upwards after the correction has completed. If we look at the scenario now, as we had anticipated, a breakout happened. It initially touched our targets of the intermittent targets of 4010, 4020. There was a consolidation up to the breakout levels, after which, just before the interest rate announcements were to happen, the market opened gap up above the previous high above the close of the previous day's high, and has been inching upwards since then. That is where we also initiated our second leg of the trade, which is on the 27th of July, with a stop loss of about 3920, which is also the 20 EMA, which was also the 20 EMA, 20-day EMA level on the 27th of July. We are still in this trade, and we are looking to hold on till a target of 4150 or 4170 is achieved, or we fall below the 3920 levels.